This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest, your daily breakdown of the news that matters. I'm Mike Savino, and these are your headlines for today, May 18th. First up, mortgage rates dropped 11% last week, but 1 week doesn't make a trend. The MBA remains confident that 2022 will be a good year.
We're also confident that 2022 will still be a record year for purchases. The number of units will fall a little compared to last year, but the dollar amount of new purchase loans will rise to a record due to the steady increase in home prices.
This is the first time in the last 3 weeks that the number of applications has dropped. So what's reversed that trend? Well, potential home buyers could be delaying their home search because of general economic uncertainty about the near-term outlook and the recent stock market volatility. In other news, mortgage bankers may be concerned about proposed changes to the Community Reinvestment Act, but the head of the CFPB is doing his best to try and calm those concerns. In fact, Director Rohit Chopra told an MBA conference that those mortgage bankers shouldn't have any problems adjusting to any changes. 3 federal agencies are proposing the first changes to the CRA since the 1990s. Those changes would require independent mortgage bankers to meet the same community reinvestment standards as traditional banks. But the MBA is opposed to those changes because those independent mortgage bankers don't have the same level of government support. Chopra says the overall goal is to make sure underserved borrowers can get help.
We just want there to be a lot of offers of mortgage credit to, all communities and all individuals that, qualify for it.
Chopra also said IMBs can meet these requirements with some of the things they're already doing, especially with advances in mobile banking. A new report from Zillow found that home prices are going up faster in suburban areas than they are in cities. That reverses the trend that we saw in the first 15 months of the pandemic. And while urban home value gains have continued to accelerate, the suburbs are even hotter, showing just how strong demand is for limited suburban inventory, a Zillow economist said. In the New York market, city home prices grew by $55,000 year over year compared to their suburban counterparts, which went up by nearly $66,000. And in the Chicago market, home prices grew by more than $22,000 compared to the suburbs, where they went up by more than $41,000 in a year's time. The National Bureau of Economic Research found that the shift to remote work was initially beneficial to suburban housing prices. And finally, housing permits fell by 3.2% from the previous month. HUD says only 815,000 single-family homes were under construction in April, the lowest number since 2006. But permits for multifamily units were up more than 16% from a year ago. Home construction continues to be slowed by a number of problems, including supply chain issues, worker shortages, and skyrocketing costs for warehousing, transportation, and other services. Earlier this week, President Joe Biden unveiled a comprehensive plan to bolster the construction industry, including home builders.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.